Hello everyone, welcome back to new weekly market update. Nikkei 225 boomed during the week due to investors' renewed interest in physical AI, but it ended roughly flat by Friday due to weak domestic data and expectations that BoG may hike the interest rates.
Interesting, isn't it? In Japan, on one hand, they might hike the interest rate, so we see indices going down. On the other hand, in the United States, optimism by investors that the interest rates will be cut has been raised even more. So we find indices going up. And so did silver peak its all-time highest this week, and also gold found some movements because of the same reason. Let's see how that looks on charts. Looking at gold, exactly as we had highlighted in the past week and anticipated, call it as you wish, it did retrace to this level before a consolidation. So, perfectly as anticipated. Now what we're looking for is, this is actually a solid resistance level on gold, right? So gold is forming a symmetrical triangle, and we can expect gold to retrace there to this support before an attempt to break above its all-time high. Now, keep in mind that this effect may not happen if the interest rate comes or gets cut very rapidly and sharply. So if people get very impulsive, we might not see this retracement to the downside, but technically it is very possible because we have multiple confirmations and reasons why markets, or gold in specific, should go back to that point. About silver, we had a similar setup to the one I'm talking about on silver. It was actually very, very good. An easy trade to be taken. If we get 5 comments requests upon silver, we'll start adding that into our weekly market updates. So this is some motives for you guys, or another way for you to make money. Actually, silver is considerably somehow better than gold as an investment because it is way less volatile. All right, that's about gold. Let's go into Euro USD. All right, guys, as you can see on Euro USD, also hit take profit, or the target, let's say, perfectly as we anticipated in the previous week. We had very good confirmations for the breakout to happen. A smaller retracement also has been highlighted, and perfectly as we were looking for. Now we're finding multiple bearish, let's say, points, which is actually causing some pressure on USD on this resistance. So we can expect some retracements to the trend line or this support before another attempt to break above the resistance. That's about Euro USD. Let's go into NASDAQ. Looking at NASDAQ, also as we anticipated, it reached the target of 25,700s, 800s, as we had highlighted in the previous week. Now we can see that there is actually interest in a bullish movement. However, this was more of a liquidating candle above this resistance, and we can also see that there is weakening movement to the upside. So what we're anticipating actually is a retracement to the support, where markets can actually go to a strong support, get some liquidity from this channel, and then a continuation to the upside and a possible breakout above. This might happen in the next week or this fortnight. Actually, we need to keep an eye on the interest rate. It's very, very, very important this coming week. The decisions are going to be very crucial to what is going to happen with markets, but technically all of it should have retracement. When I'm saying all of it, I'm highlighting to Euro USD, NASDAQ, and gold, to the ones we've spoken about so far. So that's about NASDAQ. Let's go into Bitcoin. Looking at Bitcoin, we did recommend you to stay away from it in the past week. And as we can see, there's actually a lot happening. It's more of volatile movements. It's a mixture of the interest rate cuts are to come, so there should be some bullish sentiment on Bitcoin, and also the bearish sentiment that is caused after the break below the key support 100,000. So we can see that there is some sort of ascending channel that Bitcoin is moving in. It's moving also in somewhat of a symmetrical triangle, and also we have strong impulsive movements to either sides, and also it has found strong inner resistance in here and also strong inner support in here. So it is still consolidating. What should you do with Bitcoin? Why do you care what you should do with Bitcoin, right? They did anticipate to go to 66,000, as I've mentioned before. It wasn't an optimal move, but I overall still think on a long term, Bitcoin is bullish, right? But if you're looking to trade, I wouldn't recommend you to go into it. If you're looking to invest, then why do you care about a few thousands difference? Yeah, that's about Bitcoin. Let's go into Nifty 50. Guys, our analysis have been really very accurate. If you are not hitting that subscribe button or the like button, why aren't you? Okay, we're giving you some value, give us something back, right? That's trading, you are a trader. So looking at Nifty 50, we pretty much had almost nothing going on, but still it's the same analysis. We're sticking to it. We're looking for a retracement to this support level trend line before an attempt to break above its all-time highest. That is about Nifty 50.
Thank you, Samer, for sharing insightful information regarding the technical analysis. Here is Amir Hamidian, Master of Finance student in the UK and Senior Financial Market Analyst at Zylostar. As you can see here, it's autumn in the UK and it's almost rainy every day. I want to start our market update with the last week economic indicators, especially with the United States. The latest PCE showed inflation rising 0.3% monthly and 2.8% annually, while core PCE, one of the best economic indicators for tracking the inflation for the Federal Reserve, increased 0.2% on monthly basis and held at 2.8% annually, signaling slight cooling down for the inflation, but still above the 2% target of the Federal Reserve. US manufacturing contracted again in November, with the PMI slipping to 48.2, driven by weaker new orders and deeper employment declines. Production improved and prices kept rising, but overall demand remained soft and most industries stayed in contraction. But from the other hand, the US services activity expanded again in November, with the ISM Services PMI rising to 52.6%, supported by a stronger business activity and steady new orders. Employment remained in contraction and prices stayed high. The Bank of England governor said UK banks are strong enough for the bank to escape capital requirements, encouraging them to increase lending to support the growth rate in the United Kingdom. He also warned of rising financial stability risks from AI-driven valuation, private credit and leverage gilt-repo markets. From the East, Australia's GDP grew by 0.4% in the third quarter of 2025, driven by private investment and household spending, while inventories and net trade dragged on growth. GDP per capita was flat, nominal GDP rose by 1.7%, and the household saving ratio inched up to 6.4%. Let's get back to the US. Again, private sector employment shed 32,000 jobs in November, and pay was up 4.4% year over year, according to the November ADP National Employment Report. Hiring has been choppy of late as employers welcome cautious consumers and an uncertain macroeconomic environment, said by Nella Richardson, chief economist at ADP. And also she mentioned, while November's slowdown was broad-based, it was led by a pullback among small businesses. US consumer sentiment ticked up slightly in early December, led by stronger expectations for personal finances and a small improvement in labor market views, though overall sentiment remained subdued due to the high prices and inflationary pressures. The year ahead inflation expectations is to 4.1%, the lowest since January 2025, while long-run expectations dipped to 3.2%, but uncertainty around the inflation is still elevated. Let's have a look for the upcoming week. Next week will be very busy from the central banks in all around the world, as we're gonna get the latest update and meeting for the Reserve Bank of Australia. Let's see whether they want to cut the interest rate or keep the interest rate at this level, which is 3.6%. Later, we are going to get the JOLTS, or let's say job opening numbers in the United States, which is one of the best economic indicators to track the demand in the labor market. From the other side, in the US and Canada, we are also going to have the latest updates about the central banks regarding the interest rate decision, plus press conferences and the interest rate decisions. Stay tuned with Zylostar. See you next week.
Thank you for watching. Don't forget to like, share, subscribe, and comment if you have any comments. See you in the next week.